Markets are seeing a pretty sharp sell-off today with the S&P 500 down about 1.7%. NASDAQ is trading lower today by about 2.1%. Today is obviously options expiration for February, and that's clearly having a bit of an impact today on today's trading session. From a technical perspective, it looks like we certainly have broken a rising wedge. But before we do that, we're going to take a quick look at some of the economic data. For those of you that didn't know, I was away all week, and we're going to start off with this University of Michigan chart because we've talked about this a lot over the last couple of years, actually, about how important the upper bound of 3.2% was on these inflation expectations. And we did get the final University of Michigan reading today, and you can see it printed at 3.5. So not only did it surpass the prior highs of 3.2%, but this is a level not seen since April of 1995. And, if you're talking about inflation expectations being well anchored, anything but inflation expectations being well anchored. So this is a little bit of a concern when you take a look at that. And we'll have to just kind of see how this develops over the next couple of months. Because clearly, if we keep inflation expectations this high, that's going to be a potential problem not only for the market, but for the Fed and for the economy as a whole, because that's a sign that perhaps inflation is not only coming back, but maybe actually starting to slow growth. And if we take a look at where inflation swaps have trading, we're looking right now at 1 and 2 year inflation swaps, and those have obviously moved up quite a bit over the last couple of weeks. We had been talking previously about, how important some of these levels were. And at this point, it's pretty clear that we've broken out above some of these important levels of resistance. And with the 1 year inflation swap trading at 311 on the ask and trading 290 on the ask on the 2 year swap, it certainly is a pretty big breakout that we've seen over the last couple of weeks. And, it looks like this data, some of this data we've been getting suggests that, inflation is going to not only be here, but it seems to be picking up a little bit of steam. And this obviously, again, would be a big problem for the Fed, especially if this continues to be the case. And, even when we look at some inflation swaps coming up for months that are coming, you can currently see the May swap, which is pricing for February, trading 291, June swap, which trades for March, 271. But if we take a look also at some of yesterday's trading, it's going to show us too that not only is it that these current months are trading higher, but here is 1/126, which is basically trading for October at 311. Here you can see 2/126, which is trading for November, 3.1%. And here's here's March contracts trading for December at 3.02. So basically, when you look at inflation swaps, whether it be on the zero coupon swaps, when you go 1 or 2 years out, we're trading around 3% or higher. When you look at some of the monthly swaps, they're pricing out 3% or higher inflation rates. And so, obviously, why is the market responding the way it's responding? Well, first of all, we have what's happening from the inflation side of the standpoint. And even though we've seen inflation expectations moving higher, you can see the 10-year rates responding in a weird way today, down to 4.4%. And I think this has to do also with some headlines that came out this morning as well from S&P Global, which certainly pointed to a slowdown in services PMIs. I'm not going to get into that here. I already went through that today with the members of my services. But you can certainly take a look at that report. It's public. You just have to type in S&P Global PMI and you'll get a page where pull up all that information. It's certainly worth a 2-minute read. But more importantly, today is also options expiration date. And if we go to this website, Bar Charts gives you basically all the gamma levels at various levels, and you can, depending on your level of service, you can play around with these charts and get some pretty good insights. This was basically where we were when we opened today. We had a lot of gamma at 6,100 and a lot of gamma at 6,150 that was really due to expire today. And then when we look at it from this perspective, again, here's all the gamma that was looking to come off after today. Now, clearly that's changed now that we're in the middle of the day. You can clearly see those gamma levels have shifted lower to around 6,000, and this gamma exposure basically has gone negative. And so basically, as the market is selling off, you have market makers that are now going with the flows and suggesting, and that's helping to push prices down. This website GeckBot also shows you that basically 6,000 is a big level of support from a gamma level perspective, and that's why you're finding some support right now in the S&P 500 around that level. But if you notice, the values for today much higher than where they're going to be when we come back on next week, and they're going to be much lower. So all that gamma that's now in place is really going to start rolling off. And if you see the 6,000 level break, I mean, you really don't have much support in this market below that level. So you could see, even more selling come into the market, especially if we're in a negative gamma type environment. And you can even see it from a technical standpoint, how 6,000 is a very important level. If that level were to break, that could result in a move back down to around 59.40 over the shorter term. I mean, from a technical perspective, yes, you certainly have what looks like a rising wedge. I mean, I had drawn this out a couple of weeks ago as well, where it looked like we were forming some sort of reversal pattern. Then it looked like we broke out. Maybe it was just a fake out, because now clearly we're also breaking, the uptrend that's also visible, in this chart as well. So, right now some of this appears to be option related, just, as the option market is sort of resetting following today's OPEX. Obviously, with gamma levels reducing next week, we are going to see a lot more volatility in the market. We are seeing the VIX really move today up to around 18.5. Implied correlations are still very low, though, just around 13.5. This morning we came in and they were around 10. So, with implied correlations low, and we have this low realized volatility also in the market, that's also coming in and playing a factor today. So anyway, I hope you have a great weekend. I'll be back over the weekend with another video. We're going to preview NVIDIA's results, and then we'll see you then. Anyway, have a good one. Bye.